Good afternoon, ladies and gentlemen. Today we're back with a new video. Hope you guys are all having a great weekend. Bitcoin is really stagnating at this moment, which we'll look into why this is. And we also want to take into account volume, which has been a bit slow in the last couple of days, last couple of weeks even. But really understanding why this is a key fundamental concept to understand. So, as mentioned earlier, 60,000 is really a big fundamental level, also like a big psychological level, where when you look at like the behavior of market participants, big key levels are mostly like whole integers. So look at like 60,000. Here like around 80,000 as well, here around 50,000, just like very logical places for market participants, especially professional market participants, to like close their positions or buy new positions and buy new bitcoins. A lot of volume is there, and you can clearly see that as well in here. You can see here like the relief rally into this imbalance where price just tries to push down, beautifully respecting the order flow here. Beautiful, this step, and then it breaks this and this and that. So now you see like those rejection wicks, which is marked as like distribution wicks. What the difference is. Let me see if I can find an example here. When you look at this type of thing, you can clearly see like that this wick here is higher than this wick. It looks logical, but what's happening there is like this is a daily volume level. Market participants are seeking for like liquidity that's deemed more expensive, more cheap. I'm sorry. When new volume is coming into the market, and you can clearly see like here in this the clear new volume is being injected into the market. Here it's being extracted or maybe going short, but when you look at this here, these types of things and these types of things, it's more like market participants are pushing down, but also market participants are selling. Which you can clearly see in the wick, so it's nice to look at that as well, the tidy bits of information the market gives us, but don't be too focused on that, I would say. Technically it's getting more liquid at this moment, so a lot of order pairing is going on. It's pretty transactable, as you can see here. The market is in equilibrium at this moment. You can clearly see here that a big volume spike, where some liquidity is being contracted or injected into the market. But overall, not much volume. Not like when you look at this in this move. So people are waiting what price is going to do, and even in these like slower weekend days, still it's important to keep up to see what is happening, how structure is being created and respected. You can clearly see here what we also saw in the daily, clear distribution wicks here, where really a lot of buyers are stepping into markets, which is a great sign that the level gets respected. But it also can be noted that at this moment, price needs to inject new liquidity to push for this, and to push for these kind of levels. And at this moment, it just doesn't do it. Most probably we need like a catalyst, something, some kind of fundamental thing, but at this moment it doesn't look great for the upside. It doesn't look bad for the downside as well. We are not in a free fall. that bearish. The structure is bearish in terms of the technical side of things. So really keep that an eye out for that when you're executing. Don't FOMO into things, especially the things you see on X or on other social media platforms. There's like both on both sides of the coin. You have like the bulls which predict that price is going back to $100,000 in like 2 months. And you have the bears who say Bitcoin is worth nothing. Those are two extremes. So take that in with a grain of salt and really think about it yourself. So when we look at more the fundamental side of things, you can see here that the ETF outflows is a big news item, and we have seen it in the last couple of videos as well, that outflows is being pumped up by the institutions. There's also a lot of things happening with the Fed. New chairman with the Fed. He gave FOMC last week, where the market predicts that he's gonna place in 2 rate hikes. So with rate hike and the monetary overall monetary policy, when you have rate hikes, money is getting more expensive to borrow. And if there's any market in the whole section of financial markets where there's like a lot of leverage, it is a crypto market. So when leverage is getting more expensive, then the volume that is kind of being injected is less. So less leverage, less volume, less volatility maybe. But remember, like when we were like in 2021, let's look back at this and look at the monthly and look here. Like here, all this until this. So here, this whole block, rates were like negative or near zero. So it was essentially like cheap, like risk. You don't have to pay any interest on your borrowings, which stimulates market participants to really push that risk and creating those things. So monetary policy is a thing. When we look at the outflow, what we said is like yesterday minus $444 million. So the last 2 days there's more than 1.5 billion subtracted from the market. So it's not a good sign. But on the other side, price is still stable around those levels. So that means that even when we have that ETF net outflow, there's still other market participants who believe and deem Bitcoin to be cheap at this moment. So which is great. And you can also see that in option data, where you can clearly see here that more strikes closer to the 60,000 price are being pushed. So you have here 2.5 million intrinsic value on 66,000 strike price, cumulative maybe around like 10 to 15 million. But on the other hand, you also have the bearish side of things, where the notional value of the strikes below 60,000 is also more or less the same, which you can clearly see that the last 24 hours calls and puts being bought are really at an equilibrium. It's 30,000 difference. So yeah, not that much. Now you see here the open interest, which is okay. So all in all, keep an eye out on this as well. and don't burn your hands, please. Hope you guys enjoyed this video, and I will see you tomorrow. Ciao.